What is a private placement? Have you ever wondered how companies raise money without going through the public stock market? One way they do this is through private placements. So, what exactly is a private placement? In simple terms, it is a method where a company raises capital by selling securities, like stocks or bonds, directly to a select group of investors. This group usually includes accredited investors, such as institutional investors, pension funds, insurance companies, and wealthy individuals who meet specific financial criteria. Unlike public offerings, private placements are not available to everyone. This exclusivity means fewer regulatory requirements, making the process quicker and less expensive for the company. This is particularly important in the context of capitalism and supply-side economics, where private sector investment is essential for economic growth. Private placements allow businesses, especially those that may not be ready for a public offering, to access capital. This capital can be used for various purposes, such as expanding operations, innovating products, or improving efficiency. This aligns perfectly with the principles of capitalism, which encourage entrepreneurship and risk-taking. Key features of private placements include that the securities are sold privately and are not traded on public exchanges. The offering is exempt from many of the registration requirements that public securities must follow. This reduces compliance costs and regulatory burdens for the issuing company. Investors are limited to a select number of accredited or qualified buyers who can absorb the risks involved. Another advantage is that companies can maintain confidentiality and control over their ownership structure. This makes private placements an attractive alternative to initial public offerings. Companies can raise long-term capital without the extensive disclosure and regulatory demands that come with public markets. This is especially beneficial for startups, growing firms, or private companies looking to diversify their financing sources while keeping operational flexibility. In a capitalist economy, private placements illustrate how private capital markets work to allocate resources efficiently. They connect investors willing to provide capital with businesses seeking funds. This process supports innovation and drives economic growth, reflecting the core values of capitalism. Private placements show how property rights, voluntary exchange, and market-based investment decisions contribute to wealth creation and economic development. So, the next time you hear about private placements, remember their vital role in the world of private sector investment and capitalism.